Welcome back everyone to the Moneycontrol Livestream. You are watching Markets with Santo and CJ. Well, what started off as a very good start for the day for markets, it seems like the last sheet is going to end on quite a muted note, even though this week has been quite strong for the market. If you look at the Nifty and Sensex at this point in time, they have just turned into the red territory after giving a decent fight earlier in the session. The major laggards at this point of time is definitely banks, cement companies and steel companies. These three sectors are taking it on the chin at this point of time. Even in the broader market, if you look at the mid cap and small cap space, massive amount of selling happening. Santo, the Nifty mid cap 100 index is down about 1.6% at this point of time, and small cap index is down about 1%. So a picture is not looking pretty, but at least for the benchmarks, RIL and IT stocks are doing the heavy lifting. RIL is up again 2%, adding to the 3% gains it saw yesterday, and the IT index is also just holding fort for the bulls at this point of time.
Well, CJ, I think this closing must have probably spoiled your weekend.
Yes, it has moderated my enthusiasm a little bit after the strong week that we saw, and at least till about an hour ago, it seemed like we are going to have quite a stellar, closing to the week as well. But it's just moderated or tapered my enthusiasm a little bit, because it seems like clearly this is FIIs coming back with bag loads of stock and just dumping it on the market.
So you still feel that this rally can sustain next week?
I feel so. I would not see it as a concern, because this is one thing that has kept on happening for the weeks on. Every Friday we have seen investors be a little, skittish and probably not carry their longs forward. But who knows, maybe Monday morning again they will reinitiate long positions, and at this point of time it's just a bit of good old profit booking that we are seeing in the market.
I'll anyway just repeat what I've been saying in the morning also. When overall macro conditions are weak, stock markets cannot do well. Everyone seems to be watching the stock markets in isolation, right?
Yeah.
That if there's a bit of short covering and if there's a bit of money coming into the market, then it just has to keep rising. But that's necessarily not the case. You also had Elon Musk saying just a short while back, Tesla is planning to lay off about 10% of his staff, and most importantly in the email, Musk mentioned that he's not having this good feeling about the economy.
Exactly.
This is something yesterday which JP Morgan chief Jamie Dimon was also saying, that he expects an economic hurricane to hit very soon. So you have a very, very iffy macro outlook at this point. So very unlikely that stocks are likely to do well. In fact, the mid cap segment, the second line stocks were under pressure for a better part of the day. After the first couple of hours, the pressure there was like very, very evident. So I think this is again a time to be cautious, CJ.
Well, Santo rightly said, if Papa Musk is saying that it's time to tighten your belt and prepare for bad days ahead, retail investors are definitely going to pay heed to him. So probably that is why we have seen that turn in sentiment also in the last half an hour, since news reports came in that Tesla is going to cut its staff by about 10%, and plus Mr. Musk outlook on the economy. But that said, at an aggregate level, definitely the market may not be going anywhere at this point of time, Santo. But at individual level, there are some performers out there, starting off with
Raymond, the first stock on our watch list. Now, CJ, the stock has taken quite a bit of a beating today.
Yes.
But at the same time, if you notice, in the last 2 or 3 weeks, it's rallied quite a bit, almost 50%. That's quite a huge jump. So I get a feeling that there is a re-rating underway. The stock has been ignored by the market for a very long time now, and long-term investors really have not made money from this stock. I take that, but at the same time, I think finally you're seeing probably some turnaround happening there in the garmenting business also. Overall, the company's fourth quarter numbers were pretty good, and in the garmenting business, the company has said that it's got a very strong order book position for the next 6 months at least, and we're seeing good momentum in both its engineering as well as real estate businesses. So I think this is a stock to watch out for, CJ.
Well, Santo, 85% gains in 2020 so far does not suggest to me that the market has ignored the stock, as you say. I feel that given that amount of up move in the stock in such a short span of time, definitely makes it a candidate for profit booking going ahead. And we have seen that move happening today itself. The stock was down about 10%. In the trading session, so quite a beating at this point of time. It looks like people who got into the stock at lower levels are considering taking profits at this point of time, and that it will be very crucial to see if a follow-up buying comes in. Now this is, generally these sort of corrections will attract longer term buyers into a stock if the story is intact. So maybe in the coming session we will know whether the story is as true as you suggest it is. Apart from that, I feel Raymond has a track record of coming out with these rosy outlooks, these rosy statements, and then disappointing at the end of the cycle. So corporate governance has always been a major issue with the company. As you can see, the stock is now locked in 10% lower circuit at this point of time. So as I was saying, corporate governance is a big overhang on the stock, and although the business outlook might be improving, I would suggest that some investors, especially the institutional side, may not be as enthused, and they would want to see some evidence coming in that the company is actually trying to turn itself around than what the initial commentary is. That said, one stock where turnaround is definitely happening is Wipro. One of the worst performing stocks in the IT, or at least the large cap IT space this year. It had a stellar run from mid 2020 to 2021, and because of that run, it also became one of the go-to stocks for investors to book profits on at the beginning of this year. But now the stock has risen about 9% in recent sessions, which goes to show that there is some bargain hunting that is happening in the counter at this point of time. Remember that the outlook for IT sector has not changed at all. If you look at the commentary that is coming in from some of the larger IT companies like Infosys, as recent as last week, they have suggested that demand environment has remained strong despite we being almost 3 months into the Russia-Ukraine war. I mean, there was entire fears about US recession, Russia-Ukraine war hitting demand for the IT space, but clearly none of that is materializing at this point of time, and that definitely is triggering a lot of value buying in a stock like Wipro, apart from the entire IT space actually in general. Now, if you look at brokerage firm Macquarie, they have also upgraded the stock to buy from hold earlier. They believe that the correction that we have seen in the counter recently definitely makes it worth a mean reversion candidate in the coming months, especially if earnings do come in line with the management's expectation and possibly the management commentary also improving, given that a lot of the risks that we saw in the March and April month have not materialized so far for IT companies.
Well, CJ, Wipro somehow has always been the laggard when it comes to the top tier space. Quite a sharp contrast to the scene back in 2000, where it was always among the top 3, and since then long-term investors have really struggled. It's only recently that many of them saw some kind of return on their investment, and the outlook for the next few quarters doesn't seem to be very promising if we were to go by the analysts at Motilal Oswal Financial Services. So according to Motilal Oswal, Wipro is likely to see some more pressure on its margin. It's now started investing in its consulting capabilities in a big way. So that's why you could see some pressure there because of investments. But more importantly, the brokerage says that the company has not been winning any large deals for some quarters now. So the deal momentum has considerably slowed down, and so far there doesn't seem to be any clear evidence that the company's refreshed strategy is working. So Motilal Oswal is a little skeptical on the stock. It has got a neutral rating, and CJ, I think I would go with that as well.
Santo, I am really surprised by Motilal Oswal's commentary, given that since the entry of Delaporte or takeover of Delaporte as the CEO of Wipro, their strategy actually has provided them the best ever growth that they have seen in the company for a long time. Yes, the usual gripe of long-term investors has been that Wipro's top-line growth has never ever been able to match that of Infosys and TCS since the bygone era of the dot-com bubble. But I believe that under the management of Delaporte, this company definitely has a good chance of catching up with Infosys and TCS. Now, let's not remember, if you go back 4 years, Infosys hired a ex-Capgemini employee. His name was Salil Parekh, right? And we know what has happened to Infosys in those 4 years. So, and Wipro similarly has also hired an ex-Capgemini employee such as Delaporte. And I feel that market will definitely should give this CEO a chance to show that probably this time around they will be able to catch up with Infosys and TCS.
Well, the next stock is Cholamandalam Investment and Finance.
Your favorite?
Yes. Also, this is the wrong day to be talking about NBFC stocks in general, considering that both banks and NBFCs have taken quite a bit of beating. But See, as I keep saying, this is also a market where one needs to stick with the quality names, because in a tough environment, ultimately it's the best in class which will kind of weather this storm well, and Cholamandalam clearly seems to be one such candidate. Its strengths are mainly in the home finance and vehicle loan segment, both of which are doing pretty well. Of late, it has got into the SME financing and consumer loans as well, and both of them seem to be working, because it had about 1,500 plus crore worth of disbursement since it got into that space in December. For the year as a whole, it's disbursed about 2,000 crore worth of loans. For the year 2022, it has disbursed about 2,000 crore plus of loans in both these segments, and this is one segment which one company with very good asset quality. There has been a clear improvement. Also, it is carrying excess provisions, which means that when the RBI rules for NPA classification for NBFCs come into effect from October 22, Cholamandalam clearly won't be impacted much by it. So, this is a stock one should keep an eye out for. It had touched a high of about 768. Since then, it's retreated, but the fall has been lower than many of the second line names.
But Santo, granted, a lot of the things look good for Cholamandalam. The only caveat here is that the new segments that the company has got into, especially in the SME financing space or small business loan, as you would call it popularly, I think I'm a little concerned about that space, because yes, they might have seen good disbursements out there, but we all know in the business of lending, giving money is not difficult, right? It is getting that money back. We all know throughout the history of non-banking finance, they have never faced difficulties in giving out loans, but when it comes to getting those loans back, they have always struggled, right?
But and just look at the collection efficiency numbers, that's been pretty strong.
Yeah, that is true. I mean, collection efficiencies numbers were amazing for NBFCs prior to INFS crisis, and then one day suddenly realized that everybody was sitting on bones, not flesh. That said,
not the best names. Anyway, go on.
Anyway, why I'm concerned about the SME space is because even if you read the RBI's recent annual report, right, that came out last month, even there, RBI has also cautioned banks against being complacent on the restructured book on the MSME loans, right? Because that segment of the economy is probably the most vulnerable at this point of time. It has clearly not recovered from the hit that it has taken during the pandemic. Neither it is showing any signs of recovery at this point of time. While the sector is I would give grant that the segment itself is seeing fast growth in terms of loan disbursement, but these are players who are already sitting on a lot of debt, taking on even more debt just to keep their ship afloat. So for me, while the company is showing good disbursement, I would want to wait and see how the asset quality in this segment of the NBFC comes out. Also remember, Cholamandalam has not done this business before, right? This is very new for them, and it is possible that if they take a wrong step in this segment, it could end up hurting the entire good work that they have done so far. One stock where market sentiment, as you say, has been quite dominant today is Deepak Nitrite. The stock has taken a beating definitely after yesterday. The company came out with an disclosure that a plant in Maharashtra caught fire, and that has led, although there have been no casualty so far, thank God, but there were a few injured workers and factorymen there. If you look at the event itself, it should not be too much of a risk for Deepak Nitrite, because generally these factories manufacturing units and equipments are insured against these sort of exigencies, and therefore the company will be able to recover a lot of the money that it has lost in the fire. That said, from a longer term perspective, this sort of panic selling is definitely an opportunity for me to get into the stock, Santo. Deepak Nitrite is probably one of the best plays in the specialty chemical space, and you have seen it in the March quarter, although the margin concerns have been there, as we have also mentioned in the past, but the growth trajectory, the China Plus One strategy, all of that remains totally intact, and from a longer term perspective, this is definitely a chance to get into the stock, which has taken a beating today.
Well, CJ, I'm not yet seeing signs of panic selling in Deepak Nitrite, because if you see the lows it had touched a couple of weeks back, the stock is still quoting above those prices, so there is no major panic. Now, margin pressures were very evident in the fourth quarter performance. Companies trying to make a transition to from a pure commodity chemicals kind of play to slightly value-added specialty chemicals. Now, for Deepak Nitrite and the chemical space in general, the market sentiment has cooled off a little bit, and if you see the valuations of Deepak Nitrite, they have come off a fair bit, but still I wouldn't call them exactly cheap. The stock is still going for about 8 times its book value, and also see the fact that the stock has corrected from about 3,000 odd, from October, and it's been sliding, despite the fact that overall a lot of analysts have been penning bullish notes on that.
Yeah.
And the company's profits to have been growing. Somehow smart money seems to be thinking that the story is over for now. So I would say I am not exactly very bearish on it, but don't see runaway gains in the stocks. This is again something which will languish for a while now.
Well, Santo, I take your point that sentiment had taken a beating recently, but I also feel that there has been enough correction in the specialty chemical space, especially given that valuations did run ahead of fundamentals at one point of time last year, and there has been a lot of froth that has been taken away, and probably one of the reasons why a lot of brokerages have recently come out with bullish notes on the specialty chemical and chemical side sector, especially in view of the March quarter earnings, which was, if not great, at least resilient given the macro environment that the sector currently finds itself in.
Well, before we move on to the next segment, CJ has something to enlighten us about. A quick look at the market. Mid caps continue to be under.
But Santo, don't you want to talk about ICRA?
Oh well, yes, we still have one last stock left. Okay, so ICRA, again rating agency, a simple story there. Now increasing proportion of revenue slowly seem to be coming from the non-rating business of this company. The stock price has been caught in a range for about almost 7 years now. It's never really
hence my surprise that you have this on your list. Even you almost forgot about it. It is that unsurprising.
No, but now it does appear like the stock may be breaking out of a range, and that's broking house IIFL feels that the non-rating business of the company is doing pretty well, and you already saw a 30% jump in revenues from non-rating business in FY22. This trend is likely to continue, and according to IIFL, over the next couple of years, the non-rating revenue part of the business should grow by about 19% at a compounded annual growth rate.
Well, Santo, credit rating agencies themselves have always been, probably the most, what do you call it, what's the term for it, overlooked sector probably in the space, and there is a fair reason for that. In the past 10 years or 8 years at least, what has been the annualized growth rate for the sector? Just 3.4%. Now that is the sort of growth that just does not inspire confidence. Plus, for rating agencies, definitely the capex cycle revival was going to be a major theme, because that would lead to a lot of corporates going out there in the market and raising funds, and therefore you will be needed to be rated by the credit rating agencies as is required by law. Now, there is an argument that IIFL also makes that there could be a delay in capex given the current macroeconomic scenario, given that capacity utilization has still not gone above 80% at an aggregate economic level, and the fact that interest rates are rising again, that could probably force corporates to cool off on their big expansion plans. Apart from that, IIFL believes that there is a chance that even if corporates were to go out and borrow for capacity expansion, they are most likely to do it through the banking route than through the corporate bond market route, because let's not forget, bond yields are on the rise, and there is a possibility that then they may be able to negotiate better terms with banks on the cost of funds than probably they could in the market. So for me, therefore, this is a story that is, if not lackluster in terms of growth outlook, probably it's downright boring at this point of time.
My short point before we move on to a quick look at the market is that the non-rating part of the business is where the story is.
But the rating part of the business is what their bread and butter is, right?
It is bread and butter, but well, anyway. A quick look at the markets. Sensex, it is down about 41 points now. Some slight recovery there, but overall mid-cap space continues to be under pressure.
Exactly. I mean, the Nifty Bank has extended its losses down about 1.1% at this point of time. About 0.8%, I beg your pardon. Nifty Infra is taking a beating, about 0.7% down. But it's the commodity stocks that are quite down and out at this point of time. The Nifty Commodities Index is down about 1.8% in trades, especially led by the steel stocks, which are taking a lot of beating because global steel prices have come off yesterday as well as in today's session. So things are not looking for the good for the metal space, Santo.
So tell us, what is it that you have for us in case you missed it segment?
Well, Santo, recently in our conversation and on the show as well, you were mentioning that how auto companies are, saying that the chip shortage scenario or the semiconductor crisis is improving. Analysts are very bullish that, the semiconductor crisis will improve going forward. Well, recently something has happened that could put all of that commentary into, into question. Russia has restricted export of noble gases which are used in the production of semiconductor to Taiwan. Now, let's not forget that Taiwan is the biggest chip exporting country out there in the world. It's account for majority of the chip suppliers to across across countries, across industries. Now, this has happened in retaliation to Taiwan also restricting chip exports to Russia, which has also hit their technology sector quite hard. Now, if you look at the share of Russian noble gases in Taiwan's chip industry, they account for almost 30% of the supply. So that is 30% of the supply taken off in just one go, which probably begs the question that whether semiconductor makers will be able to ramp up production as the way they have been promising to their clients. Now, for me, this goes to suggest that the semiconductor crisis is definitely not over, and probably instead of improving, it may start deteriorating even more going forward. And that would be bad news for automobile companies, which have been looking forward to a renewal in demand, a revival in demand, especially in the rural industry. But you might have demand, all right. I mean, look at JLR. They have been talking about great demand, great order book for 6 quarters now. But if you cannot meet that demand through production, then therefore you are going to let go of a lot of earnings. I mean, these are lost earnings opportunity for automobile sector. So things are a little concerned for automobile at this point of time, especially what is happening on the geopolitical side.
Well, what do we have on the horizon? I think RBI credit policy is one major thing to watch out for. And at this point, I think the market seems to be pricing in a 25 basis point hike.
Well, I think, Santo, if it is pricing in 25 basis point hike, it will be quite naive. I mean, 50 basis point is what should be the general expectation at this point of time, given the commentary that the RBI has given recently. Yes, the government has taken steps to ease some of the inflation pain, but I don't think that is yet enough to curtail RBI from going whole hog on the inflation war. Apart from the outcome of the RBI's MPC meeting, which will happen on June 8th, you also have the US employment data coming out later today. The non-farm payrolls data will come out today, which is also a crucial data just ahead of the US Federal Reserve meeting later this month. Apart from that, if you look at some of the economic data points, China's inflation data for May and India's industrial production data for April will also come out next week. So those are 2 key data points that investors will want to keep an eye on. And apart from that, lastly, investors will continue to track the progress of monsoon. Remember, monsoon has made landfall in Kerala ahead of its schedule. But now what is critical is how the progress of the southwest monsoon will be to critical agricultural areas of the country and what that could hold for agricultural output going ahead.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do share your feedbacks in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and the Moneycontrol app. We will see you again next week live from here. Till then, have a great weekend. Have some, chilling time with your friends and family, and stay healthy.
Have a nice weekend. Thank you.